Today we're going to talk about the 5 ways that insurance companies trick you into paying more for your insurance. Now, this is actually an article from a company called Streetwise Journal, and there's some things I agree with and don't agree with in here, and some of them make a lot of sense, but if you dive in deeper, it's some companies have taken advantage of the guidelines that they've been given. So yes, in some scenarios, what we're going to talk about are companies that are actually taking advantage of you. In other scenarios, there's companies that are trying to make sure they don't lose their shirts. So we'll go in and we'll dive in and actually explain the 5 ways that we need to know for insurance companies if they are or aren't taking advantage of you. According to the first one, we've got personal characteristics. I love how they put these special words behind it. It's essentially gender. There's companies in most states, in some states, excluding like Michigan and Montana and North Carolina and Pennsylvania and a handful of other states, they no longer allow you to use gender as a rating factor. They also have outlawed like marital status and your education. So those are 3 or 4 different pieces that insurance companies usually rate on, because it's kind of been a known fact, at least for the majority, that females have driven better than males. And so insurance companies were giving better deals to those that were female. Even so that there's even articles where people have changed their sex technically to show that they get a deal. Now, that being said, it's not that big of a discount. I've been in the industry for over a decade, and we're talking less than 3% for that male versus female scenario. In all honesty, most companies have just removed the gender rating purpose, because think of it this way. A lot of companies, what they used to do, this is another example, is they used to rate for if you parked your car in the driveway or you parked your car in the garage. Well, everyone figured out that if you just said you parked your car in the garage, we'll just get a better deal. And that was, once again, a very, very minor discount, probably less than 1%, but people knew that, and so they always said I parked my car in the garage. I wouldn't even ask the question and people would tell me that because they always thought that was the deal. That doesn't exist anymore because so many people have said, I parked my car there, then they just naturally have built that into the price of the policy to where you just get the discount either way. Marital status really shouldn't technically be a rating factor, and it really doesn't even matter because when you add a spouse, it usually makes it cheaper. Not the fact that you have a spouse, but the fact that you have a second person. So if we're talking about homeowners insurance, that adds to the risk the more people you have. But if we're talking about auto insurance, the more people you have, it actually can and can't hurt you. So if they have bad driving records, sure, it's going to make the price a lot more expensive. But if they have really good driving record, they're going to lower the cost because the risk is being spread out. If there's the same amount of people to the same amount of cars, that's different. That means each person has a risk on each vehicle. Whether they rate the drivers on each car or not, they're showing the risk is spread out evenly. But if you have 2 drivers to 1 car, the risk of that car getting in an accident is actually lower because it's not the same person depending who's got the good or bad driving record. Also, which we're going to talk about in one of these, is who's got the better insurance score. So that also can play a factor. Like your spouse, you may not realize it, but we have a button that most companies can click that switches the spouses. Husband has a better record, or wife has a better record, or significant others, that counts nowadays in most cases. You can switch them back and forth to see who's got the best deal. There were some companies out there that actually automatically checked it. It's just for some reason they haven't updated the systems to just automatically do that for you. That's why having a really good agent that knows what they're doing is very purposeful. We've got tons of videos on that if you're trying to figure out if an agent is a good fit for you and how to search for the right companies. There's a ton of videos in this channel, which I'll link some down below for you as well. If you guys are shopping, I actually work with a handful of agents that are personalized and local, myself included in certain states, and we actually do work with people. So if you are interested in getting a quote, I'll put a link below. Go ahead and fill it out and see if there's an agent that's a good fit for you. The second way that some insurance companies trick you into paying more for insurance is the lifestyle. And that really is another fancy word for saying, do you rent or do you own? If you rent, you may have a higher risk. If you own, you're more touted as being more responsible. Not always the case, and actually in some cases, in some states, it doesn't even matter. Same thing, some states don't rate that because it's kind of been proven in most states that you can't really tie the price to somebody based on whether they rent or they own. I've been lucky in Michigan where we actually removed that rating, and it's kind of nice to see when you're talking to somebody. You actually get almost, as an agent, almost a down feel for somebody that says I rent, and you're like, oh, the price is higher, and they're not going to want renters because nobody wants renters. It's part of our ingrainment, right? We think that it's just a ripoff that we're going to pay for the renters. Most people don't know that it's actually most often cheaper to have renters and to have auto mixed together anyways. So it's actually a good thing to have, and the liability from renters is the main piece that I focus on. If you don't care about your TV, your couch, your shoes, all that stuff, we care more about if you're sued for $500,000. That makes a big impact on your life. So having those right coverages in a liability policy, aka also a renter's policy, same exact thing, is a good thing to have. Plus, if it's cheaper, why not? Unfortunately, some states do count that against you. So if you are a homeowner, you may be getting a better deal versus if you are a renter. But Mark, how much more? Well, according to this article, it's about 7%. That actually kind of feels right, to be honest with you. I've noticed that difference a little bit more. The biggest thing is if you're combining. So whenever you're doing a quote, whether it's through us down below or if you're doing it through someone else or anywhere, if you are debating it, at least check it. Because that multi-policy discount is a very, very large discount. We're talking 20%, sometimes more. That kind of leads into the part we already mentioned, which is credit history. Everyone says credit history. And I actually hate saying this one because it bugs me a little bit. There is no credit history in insurance anymore, at least not that I know of. If there is a company doing that, odds are they're breaking the law. Most states have outlawed it. There is, however, an insurance score that they can check. If you want to learn more about the actual what it counts as, because there's a lot of factors to it. It's checking, yes, your credit, but also payment history, claims that you've had in the past, and your insurance longevity. So there's a ton of different things that it's checking. I'll link the video here if you guys want to watch more about what an insurance score impacts, because it does make a pretty big impact, not always on what you pay. It impacts how you pay. What I mean by that is sometimes I pull my hair out because I got a great client and they're nice, they understand it, they get it, want it, and need it, right? We're working with them, and all of a sudden the company says, yeah, we'll only do pay in full. And you're like, crap, they have really bad credit, they have a bad insurance score, or something's affected that. And so the companies, in order to weed a lot of that out, is they make them pay more down payment, or they make them pay the whole thing up front. A lot of your major companies, and I would say probably your top 5 insurance companies, have some sort of algorithm that determines that. And there's no tricking it. There's no faking it. There's not a way to make it work in your favor. It honestly has to do with your history. That's why that video is so important to watch, so you can learn more about how that affects it. Sometimes it's you're paying $300 down on a $100 a month payment. So $300 first month, and then $100, $100, $100, $100. So it keeps going. And then when it renews, a lot of the time, it's just going to average those payments out so you don't have to pay that large down payment again. You've kind of proven yourself that you're ready to be with that company. Before we go into the fourth one, go ahead and leave me a comment. Let me know what your thoughts are. In all honesty, the typical person that's paying less than $100 a month or less than $200 a month has been more of a problem. Like it's, oh, I had a lapse. Oh, I forgot to pay. Oh, I changed my credit card but didn't tell you. Oh, this, that, and this. And it's almost a frustration on everybody's end. As agents, we're used to it. We're not going to be upset. We're going to help you get through it. That's our job. If someone is, you've got the wrong agent. It's really just a struggle, but we're not going to fix it for the people. We've got to let them know, hey, here's the scenario. Your payment declined. This happened, that happened. And it's up to the person to fix it. I get the point to where if you've been a good driver, you've had a good history, you've had everything go well, but your credit is bad, that shouldn't affect, in my opinion, how much your insurance costs. Let me know what your guys' thoughts are. Number 4 is a little bit rare for most companies, but it's called making inquiries. That's if you're checking on your policy, checking on your claim, utilizing the service team more than expected. Now, this doesn't play a factor with agents because agents are offices. They work with you and for you to help you determine the situations. But if you're calling 1-800 this company, 1-800 that company, or you're going online direct on your own, you're going to be rated based on the amount of use that you have for them. Part of the reason is they're trying to chop the price down, and one of the factors that they've done is if this person never calls us or doesn't call us 5 times a year, then we'll keep the price low. But if they call us too many times, or they ask too many questions, or they need help when service and utilize our actual service line, it's going to slow our whole operation down. There's a charge for that with some companies. You get what you pay for, right? You buy the low coverage, you buy the cheapest thing, you don't get the advice, and then when you need it, they're going to make you pay that back for that use. Number 5 is pretty obvious. I don't even know why this is even in the article. It's called the car extra and the models, or whatever the case is. I'm reading it right here. It's the adding extra features on your car. I'm going to max my car out as much as I can, man. The insurance really isn't going to matter that much. That's kind of like, they're not tricking you into that. You're buying the car. You check the insurance before you buy the car. That's pretty easy, right? I've had a couple people try to buy the insurance after the car and then returning the car because that Camaro or that Corvette or whatever, even though they could afford that $900 a month payment, they couldn't afford the $500 a month payment on the insurance. You got to check that stuff ahead of time. That's just due diligence. If you are in that situation, sometimes I get it. You get excited, you buy the car, you need insurance, you go to get it, and all of these extra features on the car are too expensive. That's not always the case. Sometimes you're just not a fit for the company. If that's a high-risk car in that insurance company and you're not the perfect fit for them in general, then sure, your rate's going to be really high. That's where it's time to look at different options. Each company fits each profile. There are a lot of companies looking for high-risk drivers. There's a lot of companies that are looking for the sweet spot, which is your 50-year-old or 40 to 55, and your homeowner, you have a car, maybe a motorcycle, you're insuring more than just one product. And you have your perfect 100% million-dollar house on up, and they want only the top of the line. So you've got different companies for different scenarios, and most companies have sub-companies that they do it. That's why on your paperwork you see these underwriting companies, underwritten by this company. It's because they want to keep the name brand on top, but they're going to be underwritten by a different company to make you a fit for each different situation. Bottom line is some of these articles aren't accurate, and you got to be careful what you read on there. There's a ton of different things. All of the things we've talked about are minor. They are some things in some states that companies have taken advantage of. In most states, they've really eliminated that credit rating, so that's a good thing for most people. In most states, they've eliminated the marital status and the home ownership and the occupation. Occupation does play a little bit of factor, but nowadays it's not so much a factor of price. It's more a factor of if you're going to buy an additional policy, like an umbrella policy. Certain occupations are too high of a risk for those scenarios, so they have to make sure that you're a good fit. If you want to learn more about that, umbrella policies are super powerful and super cheap to add on to a current policy. So if you're worried that you may have a risk that's too much and you don't have enough coverage, don't pay more in the car insurance or the home insurance and bump everything up. There's that umbrella policy that's going to save you the most. Go ahead and check out my Umbrella 101 there. Otherwise, if you're still new to insurance, check out my auto insurance or home insurance 101. It should be linked below. I'll just say whatever's best for the viewer, and it should pop up the best one for you. I'm Mark with Think Insurance. I'll see you in the next one.